Are you looking for some fantastic income, worried about stock price volatility? Let me tell you about some really interesting opportunities that I've recently come across in preferred stock. Now, one of the first questions that you might be asking is, what is preferred stock? Is it for me? And what might I be looking for when I'm looking at preferred stock? In a very simple sense, preferred stock is above the common stock, what we normally think about as equities and what they call the capital stack. So essentially, if something went wrong with the company that we are invested in, a bondholder is going to be made whole first. That is, bondholder is going to be repaid first. Then there'll be a whole load of other types of debts. There'll be preferred equities. And then last of all, there'll be a common equity. Now, what that means is if you're a common stockholder, a normal stockholder, you are less likely to be paid out. You are less likely to receive a payout if something goes wrong with the company. Now, preferred stocks are also quite attractive for many other reasons. One of these reasons is even if the company is in a little bit of turmoil, if they have a rough patch, if they need to say, suspend their dividend, for example, most preferred stock will have a clause in there saying that even if they have to stop or pause on paying the preferred dividends, they will have to come back and repay everything that they've missed before they are able to go and pay dividends to the common stockholders. Now, that is interesting. That gives you some security. Now, you might not get that dividend payment on time, but you can be sure that it's going to come back to you soon. It is also sometimes a little bit interesting. There's a lot of different types of preferred stock. There's a lot of different ways that the preferred stock options can be set up and managed. Look at the link down below for some further insight into preferred stock, preferred equity, and what this means and how you can learn more about the preferred opportunities in your stock that you are interested in today. So, what are three of the major reasons that I might be looking at preferred equity? Why might you be looking at preferred equity? Number one, you are more likely to be paid that dividend, as we just discussed. Number two, that dividend is likely to be higher or a more substantial level than what we see with common equity dividends as well. Number three, the preferred equity tends to be more stable than common equity. And if you think about it, it's like a half common equity, half bond. It's somewhere in the middle in many ways. And what this means is that the preferred equity will often trade at quite a high level, but when the value of the preferred equity does go down, when it does decline, it can offer you the opportunity to get in at a really good price, locking in some very high yields, and at the same time also giving you the potential to gain from some capital appreciation there. Not as much capital appreciation as you would see in the common equity, but it can trade up to what they call a par value. And that can give you some upside momentum that you can trade into or invest into as well. So you can get a little bit of a capital appreciation while locking in also a very beautiful dividend yield. And that's one of the main reasons that I personally tend to use preferred equities in our portfolio as well. Now, let me just turn around and we're going to jump into Koifin. I'm going to highlight one opportunity that I'm looking at today currently that I think is very interesting and it might interest you as well. Now, Arbor Realty is a company that I have talked about before on this channel. It has a higher common dividend yield and it also issues preferred shares. Now, this is a mortgage REIT, which means it tends to have that higher dividend yield as well. Now, we can learn a little bit more about the Arbor Realty here. There's quite a lot of interesting information. I think they've got a very strong management team and executive team as well. They've got a reasonably steady, reasonably stable business operations here. Now, having said that, because of the current valuation, I'm not 100% keen on having a position in Arbor Realty. And when I look at that, I look at it a little bit differently because I'm looking at this from a preferred stock or preferred equity perspective here. So we're going to switch over to Koifin. We're going to find out a little bit more about the preferred equity here in Koifin. Okay, here we are back in Koifin. Now, as I've said many times, there's a lot of reasons that I like this platform. Look at all this information, equity markets, global markets, currencies, global yields, US equity factors. So there's a huge number of things that I do love about this platform. But one of the most important things for me is that it gives me access to a massive range of equities. So for example, one of the preferred stocks that I want to look at today is for Arbor Realty. ABR is the normal stock code. Now, you'll see here ABR has been picking up everything here on a number of different stock exchanges globally, and we're beginning to see some of those preferred stocks down here. Now, if I was just looking for the preferred stock, I would probably click on the advanced button. I can look in the asset category and I can say lock down for equities, preferreds, warrants, CEFs, and all these other type of instruments. Now, at the moment, I just want Arbor Realty stock, and we see here that they have uh, one, two, three different series here. At the moment, I've got a position in the F series. So I'm just going to click on this. It's going to bring us up a little bit more information about Arbor Realty and the Series F fund. Fantastic. And we can see here, it talks about Arbor Realty Trust at the top. It notes with the stock code here is the preferred fund here, the PR and Series F. The different stockbrokers and different platforms all report this in slightly different ways, but you should be able to access this on most of your investing platforms. Now, here's some of the key data up here. The dividend yield at the moment is 8.55. We've got details here such as average daily volume. The beta is also an interesting one as well at 2.0. Some of the quick points here as well, the market cap, so it's a relatively small company here. And we can see here as well with the market cap how it has changed over the last 5 years and grown quite large. Now, perhaps one of the most important elements to look at here is this chart here. Now, this is what they call the snapshot chart. It is definitely showing the preferred Series F. Now, that's really interesting. Now, you'll note over here at the start of the chart, it is bouncing around 25. Now, that 25 is like a par value. Now, eventually, I would expect to see prices to return to this. Now, as you can see, if they're currently prices at about 18 US dollars, returning to 25 US dollars gives us quite a nice level of capital appreciation. And not only that, because it's 18.27 at the current share price, it means that the dividends being paid today are going to give us quite a nice level of dividend income. Now, switching over then to the dividends. So again, this is just looking at the preferred stock. So here, just looking at the preferred stock. So as we know, it's a relatively recent comer to the market. We can see this consistent level of dividends of 39 cents per quarter. And is the company itself doing well? We can begin to look at the analyst estimates here and the overall results. I do like to look at the earnings per share and how the company's been going. Now, this is the ABR preferred. We'll switch over to ABR proper and we'll get a bit of a sense of the earning history. So how has the company been going? Let's discount the earlier points here. When we begin to think about the management, getting things a bit more under control, we can see here some small misses in about 2016. But here, even since the COVID pandemic, the company seems to have been doing a fairly good job of improving the earnings in line with analyst estimates. They're slightly beating the analyst estimates here since the COVID crash, and I think that's quite a positive outcome overall. Now, the company itself has also seen a stock price decline, and it's also interesting as well when we begin to look at the level of dividends for the company itself, so the common stock dividends. We can see that the dividend payment is 43 cents a share, running at a dividend yield of 12.5. Now, I know that I said that sometimes the preferred stock is a little bit higher than the common stock. In this case, with the mortgage REITs, it's in reverse. So switching back to the preferred stock. So look, we've got an 8.55% dividend yield now, which is quite healthy. We know because it is preferred stock that even if something goes wrong with the company, even if they have to cut their common dividend, they're not going to be cutting this preferred dividend. And I do like that. It has this fantastic database here that I find very useful when I'm looking very particularly at these preferred stock opportunities. So as it notes here, information for income investors. Now we can look up all types of preferred stock, for example. But most importantly, it gives us a lot more details about what the preferred stock is and exactly what it means to be investing in the stock today. Now here from the top, we can see, for example, it's called Series F. It's something fixed to floating. It's cumulative. It's redeemable preferred stock with the liquidation preference $25 per share. Wow, quite a lot of gobbledygook. Now, despite the 6.25%, that's 6.25% at $25 per share. And because of the current low price of the shares, it means if you buy now, you're locking in an 8.55% dividend yield. Now, what does this $25 per share mean? It means that prices could very well trade up to that $25 per share. Now, if you scroll down the bottom, I'm just going to ignore the chart. There's a whole load of information here, which is important, and we're going to have a quick look through some of these elements here. So 6.25%, yes, that's on the $25. That's redeemable at the Arbor Realty's option on or after 2026 here on the state at $25 per share. So what that means is if I buy it today at $18.27, it's entirely possible in 2026 the company will redeem at $25 per share, and so I'll get nice capital appreciation from this $18.27 up to $25. So that's quite a nice capital appreciation possible in only a couple of years. And that's one thing that I like to keep half an eye on. That's cumulative. So in other words, if they're missing out, they've got to catch up. So if they do not pay the dividend for some reason this quarter, it means that they have to catch up before they can pay out any other dividends. They have to catch us up as preferred stockholders. So it tells you when the quarterly pay dates are going to be. A record date 15th of the calendar month, ex-dividend date's 1 day prior to the record date. Now, this is important as well. From the state up here, and you'll notice a very similar date to the date there. From the state here, end of October 2026, dividends are going to be paid at a floating rate. So no longer fixed at 6.25, but at a floating rate, and it's going to be the 3-month SOFR plus 5.442% per annum. Now, having said that, if the SOFR rate was very low, they've still got a lower floor here, so they cannot pay a rate lower than 6.125% per annum. Now, very important to note as well, the dividends are not eligible for preferential tax rates in the USA. Now, another really important point here is what happens if this company is bought out? What happens if a large REIT swallows up Arbor Realty? Now, the simple answer is they have the option to redeem at $25 if that happens, and they have to also, you might have the opportunity to convert preferred shares into common shares, and they also have to not only buy it out at $25, but they also have to pay any unpaid dividends to the stockholders. What do you think? For me, this is a nice opportunity here with preferred shares, giving me a little bit more certainty, a little bit of upside capital appreciation, and some very nice juicy dividend income in the meantime. So hit me up in the comments down below. Do you have any preferred stock? Is this on your radar? Is this something that you might think about adding to in the future? Let me know down below, and I'll see you in the next video.